Hello guys, glad to have you on board again today. Nice to see what we've done with the Bitcoin during the night session and the ENG session, and they've been doing pretty well and pretty much what I was expecting back then, which is that we've now broken up the resistance, which wasn't actually wasn't necessarily going to be a resistance. It's that price in here, which is 7,800. You can see it's a level that has been tested through time a lot of times, but first it was a resistance, it became a support, broke it down, tested it as a support, and then after that test, every time we've been testing that level, every time it's got broken up or broken down, depending the side we were testing it. But at that point, tested it as a support, broken it down, and then anytime we tested it again, was broken instantly. Broken up, tested as a pullback, kept on going upward, tested in here, broken down, and then tested as a resistance and moving downward. So what we've done in here is just testing it, broken it. Not even testing this. I think that is not necessarily going to be a test. It's just that we went there, breaking it up, and I think we'll just keep on going to the higher pricings and finding out the next resistances. So yesterday we've been talking about the fact that the weekly chart, daily charts were showing some kind of divergences throughout the signals they were putting out. And what we're having today is just that the shorter time frame just figured it out all by itself. Yes, we would need to wait right now to have that candle to close like that. But if we handle to get the close at the high, then I see no reasons to get worried about. Even though we had a negative momentum, as you can see, the price have been breaking through the trend line, the target, the sine wave target, which means you cannot short anymore. It's not possible to get bearish out of this, so you just let go with the bullish positions as long as you don't have big warnings. But look at this, I mean, right now we're having momentum straight to the top, so it's just nothing that you can expect to sell until you have a very brutal price reversal. I mean, you need, at least right now, you need a candlestick pattern to consider that trend over, because the momentum is there, and I see no reasons to overcome that and reverse that brutally, unless something unexpected happens, because it can happen at any time. But I think that without a market catalyst that could flush out that trend still ongoing, I see no reasons for this to stop. And just to make its way up to the next resistances, which are just a few $100s higher, but I see the prices probably going to break up the 8,000s. I don't see this being much of a resistance. We can work this out a couple days, but as long as we don't have a bearish reversal candlestick pattern, all I can figure out is the price to have probabilities to just keep on going, and eventually we might even have a bullish trend. Because if you just follow the indicators right here, there was a resistance, the market is overcoming and moving straight ahead and above that resistance, generally means that the bears are not there. We have no bears, means we have possibility to install a trend, at least as long as we don't have signals that the bears are in. We just need to wait. It's not possible to sell anymore. It's just, if you want to sell, just be patient. It's not your time right now. You had a timing in there, and you will see that in the 2-hour chart time frame, we just flushed that timing totally out. There was nothing suggesting the bears were in control right now. You just had that taking profit pattern, and we just broke it up. And as I said, we have multiple options in terms of strength, but the test had to be done up here at 7,900. Which means if bears were in control, they should never have let us go higher than that. They should have held that price and reversed bearish in here, which they didn't. Because from what you can see, we've made multiple candle closures up there. So until we get a brutal reversal, I'm not changing my mind on the bullish perspective on that market. So only option, the market is brutally retracing back to that previous support. And if that's the case, then I'm ready to take some profits. But I think right now it's not something that you should be considering either. It's just waiting right now and to see how high we could get searching for the next resistances. We've got multiple levels to target, which is right here. For example, we've got 8,200, which is a nice level, which we got 200% extension of the previous bullish move, which gives us a Fibonacci extension target up here, and gives quite some clues that the market could go there. But that doesn't necessarily mean that we'll have to stop there. We can eventually even go to 261% extension. That leaves us right up here at 8,800. So I really recommend those who would like to sell aggressively to just wait to have the signals confirming this. It's not that right now I've been switching to bullish and all I want is the markets to go crazy higher. I still think that the bears will be in control at some point. It's just that right now I have no signs of bears being at play. So I'm just waiting to have some signals, pre-signals, that there will be that I'm not the only one looking for sells. Right now, that's what I think. Those who are selling right now are just probably the only one doing it. So, as I said back then as well, I think the most reliable trading area is near the 61% retracement, which means if you go to the daily chart, in which we've been talking about yesterday, that 61% retracement is a point that I obviously want to take partial profits on, which means for now I'm waiting. Okay, to have either that target number 2 price tested and rejected by a bearish signal, which is nothing close to be plausible right now, because from what you can see, we've been making a bullish breakout, went above the target, which means generally in that perspective the market is generally just keep on pushing, making a pullback and then pushing higher. So I expect the market to go there to those $8,350, which purely take the 61% retracement and take that price, and this is where I'm ready to take some partial profits. I'm probably going to take 2/3 out, so 66% of the position should be taken profit in here. Of course, we've been making videos to follow through the entire Bitcoin trade scenario. We made a video when we entered, we made a video when the risks put it back in. Now we will make a video when the taking profit pattern will, will be triggered, and so far it's not. I'm just watching closely for the market, waiting to have pre-signals that the bears, at least that there is bearish demand. Let's call that the bulls getting out, because all I think it will be is just this. I don't think the trend will reverse near that resistance, that will need to range that price for quite some time. But I think in between, just waiting and let the price go to those resistance might be the only rational choice. Today's great news is the fact that the Bitcoin is not doing it on a solo kind of trading. Ethereum has been reactivating pretty nicely. We now have a bullish pattern breakout triggering on Ethereum on 2-hour chart time frame. With a target just right here, so right below 500, which is 493 and a bit, which is a price area. This is a resistance, so I think that as long as this is holding on, I think we can consider putting some kind of alert in here, and that might be a sign of either weakness from the Ethereum, and if for some reason the Ethereum were to fail in here and getting back to the breakout level, that would be the worst case scenario. The best case scenario, of course, will be to get there, overcome that level, break up the 500s, getting in here and making higher high, and probably heading toward the 38.2% retracement, which we've been talking about yesterday. So 2 options: either we fail in here and the risk is to go to the downside either afterwards, and probably taking the Bitcoin in a row, and getting back ready for a downside ride. Option number 2, Bitcoin was ahead of everyone, is going to lift every other altcoins, and Ethereum and IOTA, for example, have been lagging behind. Will be probably heading toward those targets and rapidly taking back the gains they've been missing out of the Bitcoin. If we have a look at the altcoin index, we've got the same thing happening in here. Double bullish pattern triggered, perfectly confirmed by the blue triangle. So anything you don't want to trade this bearish. Okay, it's a big, nice, beautiful double bullish signal. I strongly think that this is going to lead us to the next resistances and eventually trigger some kind of breakouts. So in an altcoin perspective, all I can see right now is the possibility for a bullish wave that should break up some resistances, because as you can see, we've got wave 1 in here, wave 2, wave 3. None of those two are extended waves. But if we do move into a 5-wave structure, 1, 2, 3, 4, 5, means that at some point we have to break a resistance at least. Okay, impulsive waves, so 5-wave structures, always needs to break a resistance, and from what I can see, this is the resistance. We've been testing it, which means so far I think we have lots of chances to break that up, to get to the next targets, and I think this is a viable resistance for us. So as you can see, it's not that big of a deal. It's just getting to rise the altcoin prices by 20%, something that the Bitcoin itself has been moving ahead to for quite some time. So I would like to see the altcoins doing quite the same, but that's still highly speculative, so don't put too much money in there. It's still heading toward retracement, and obviously don't forget to take the profits if we're getting there for some reasons, and don't necessarily think that this is what's going to be the case. We could just break the resistance, go slightly higher and stop there. Okay, consider this as a strong resistance as well. As you can see, we've had some kind of drop down in here, and generally those prices are heavy resistant. So you just take the highest close the market managed to make, and generally this is a resistance. So it could just lead us there, and that's a lot less gains to expect. But still a bullish outcome, because we'll make 5 bullish impulses, probably 2 bearish retracement waves afterwards that we'll have to buy to get another bullish impulse afterwards, if that was about to come. So we'll see about that. That's all I had to tell you guys about the cryptocurrency markets. Now we're going to move on to the other asset classes. And from what you can see right now, we've got not a big of a deal in terms of catalyst today. It's just some are taking the consensus, some are beating, some are just behind it. So we don't have market catalyst today. So it's just basically going to be some kind of nasty, uninteresting, rangy market today, unless something unexpected is pulling out. Don't expect the market to be trendy today, or just keep on going with the ongoing trends. So we'll see about that. First, we'll have a look at the SPX 500. And from what you can see right now, it's not really doing well. We've been pulled backing in here, and I think the market is going to try to keep on pushing with that trend. But I think that trend is dangerous to trade for many, many reasons. The fact is that we're still under major resistance level. If we have a look at this, I mean, I think this is where we have the big short demand, which means in that area, if we don't find bears, I'm going to set things really straight in here. If we don't find bears in there, big problems are down the roads, because we're going to head to the market top, and I'll see no reasons not to go higher than that afterwards. So it really is multiple shots, multiple options to go there. We got a final resistance in here. I think this one is pretty interesting. 28.31. I think this is a price I'd like to get to sell. I'm not certain about the fact that this will be offered by the market, but if we go there, I mean, this is the last man standing in terms of bearish opportunities. If this one's falling, I mean, no chances the bears can hold it anymore. These to me are prices we shouldn't get back to. I mean, these are exuberant prices, just stupid pricing. It's just like the bubble into cryptocurrencies near the 20,000s. It's pricings that we'll never ever get to retrace to. So if the market is still rangy or bearish, I think these are the prices we should never get up to. So we'll see about that, but what we're doing right now is just basically waiting to see this playing its game through time. So each of those levels is going to be a resistance. We've been testing the first one, apparently not doing the job as we didn't manage to break down the support, and we're already back to resistances. So we're now, I think today or tomorrow, we're going to test the next one, it's 28, 21, and from what I can see, chances to be the right candidate. This is where we got the POC level back then, so the level in which we got the biggest amount of volume. So I would say that this one has a lot more chances to be the candidate. So what we'll do is basically we're going to take it into a straight line instead of a dollar line. We're going to put it slightly larger, and we're just going to wait. Okay, I think that right now these are the levels I want to trade. This one, I'd like to take a short entry out of it if a signal is triggered. But this one up here definitely is a price I'm going to sell eyes closed, just because the stop loss is going to be very cheap. I mean, entering in here, putting a stop loss in here is going to cost you 25% loss with the leverage 1 for a gain that could go up to 15%. So obviously I'm going to take that trade, even if I have to lose that 25%, that 0.25%, no problems. I'm giving them a wave. No, really, it's going to cost me $100 approximately. Sorry, it's going to cost me a little bit more. Let's say 200. It's less. It's $150 approximately. This is what it's going to cost me to reward. If the trade is triggering there for some reason, it's going to give me thousands. So it's really something I'm not going to miss. If I have any kind of bearish signals up here, I'm obviously going to take this one. So I wait for signals there or there, and eventually taking this one just eyes closed if the price is offered, just because the stop loss is really, really cheap. Okay, so that's how I'm going to play this. I think right now waiting is the only option with Wall Street. They've got some room to work this out in the next, let's say, I think that week and probably the week right after is going to be still remaining bullish. Not necessarily going to the moon, as I said. I think we're going to narrow the price ranges, probably building some kind of rounding top structure. I really and strongly expect something like that to be playing in the next following days. This is, Jesus, where the hell is that? Yes, it's the curve. I really, really think that this is what's at play. The curve kind of trading in which we're topping up slowly but steady, and at some point we're going to reverse. This is what I think we're probably about to do. I mean, going there, sorry about that, I just have to do it better. Okay, just going there, some kind of rounding top structure, bottoming up, topping up, either there or there. I really don't know, I have no clue, but this is what I forecast the price to make. Some kind of rounding top structure, and right in here everyone forecasts the fact that okay, the market top is not accessible anymore, we'll have to go bearish, and bam, we're going to go reversing brutally in here, taking out all the stop losses, and those who haven't sold their assets in here will have to do it in some kind of emergency trading. And as I said, we've got stop loss triggering in here, stop loss triggering in there, which means anytime we're going to go below that support, it's going to be nasty stop hunting kind of trading. So I expect the price to do just vertical trading out of it. I mean, whenever that pattern terminates, and it can take quite a while, as I said, for a very simple reason, the fact is that, waiting to get this loading. Come on. Okay, now we have it. The fact that if you have a look at the weekly chart, what we've just done during that night is just breaking the previous week's high, which at least is giving us some time for the bulls. Not to say that it could reactivate the bullish trend. I mean, if we go there and if we don't find any bearish demand, we can just keep on going week after week. So I don't think that's the way. I think the best now we can hope for is just the market to hold those prices for quite some time and then to break that down. But the fact that we just broke the previous week's high is not the best case scenario for bears, which means that we need to be patient work this out and do what we can to hold the price near that current area for an extended time. So at least that week, probably next week. The only uncertainty I have right now is that, the only certainty I have right now is that I need to be patient, that if we ever have to find a resistance in here, we got two options. Either we need a catalyst, something that the market is not expecting and it is brutally pushing us to the downside. Option number two, we've got to work our way out there, making some kind of really nasty rounding top structure, and afterwards we're going to have to go bearish. I really expect the market to go straight forward to the major supports, which are really a lot lower pricings than what we have right now. Expect some kind of pricings like that, just a rounding bottom first, and then everyone's doing the same thing, which is falling apart. And I think first support is there, and we're probably going to have to break that down. So go just slightly lower in here. I think 2400 is the price I forecast the market to go. Really strong resistance in here. We've been overlapping as a support in here. I would really be surprised if we don't go there to test that level again. So as you can see, if we ever had to top up here and get to 2400, it's a minus for a 15% drop. Still the same levels I've been forecasting for weeks. Once again, I'm no magician. I don't know what the timing will be, what the market catalyst that will push us right there will be. All I say is that in terms of risk-reward ratios, this is what I want to trade. I rather like to lose a couple trades if the market keeps on going up, but I have to try taking that potential bearish reversal, because if it happens at some point, everyone is going to follow this in a straight line kind of trading. So those who haven't been anticipating this won't be able to take gains out of it. It will be too late to take the short entries. So if we fall, it's just the bulls will have to get out and take some losses, or take out the gains, the long-term gains, and that's all they do. They will not sell. They will just get in there and release the gains and wait to have further opportunities to buy at cheaper prices. Okay, so those who want to profit from the sales will have to do it by anticipating the market. You cannot trade this by a breakout trade on an ongoing falling market. Otherwise, you're taking too much risks. So it's anticipating if you want to do it. And once again, anticipating is something that you only want to do if you have a little bit of experience into trading. If you're just a straightaway beginner, just walk yourself away from this. Don't get in there. Just look at what the market could do, learn a couple lessons, but don't put any kind of money in that scenario. You won't be able to handle the psychological effect behind it. Just compare you and I. Most of you guys have been trying to short Wall Street as well, but most of you guys have been doing it not the right way. You don't have the patience. I've been really patient with Wall Street. I took a couple losses. I took nice gains, of course, in the meantime as well. But I have the experience and the patience to hold the psychology with that speculation. I know even for me, it's hard to handle. I'm some kind of lacking patience at that point. Been waiting for 4 months for that thing to trigger, and I know at some point it's going to trigger brutally, and that all I've been waiting for in 4 months is going to trigger in a week. And that's what I think it will be. I really don't know if that will be the case, but I think that's how it's going to play out. It's just that I've needed to wait for 4 months for the volatility fucking sellers to get out of that market, but at any time they will, and when they will, they'll have to pay for the shit they've been putting in the market. This is market manipulation. As I said, it creates distortions in pricings, and whenever this happens, it always ends the same. At some point, the distortion is costing too much to keep it ongoing, and the market brutally takes it to a wrong footing pattern. We've been pricing not accordingly to the real risks. They've been selling volatility to make gains. Nice, they've been making nice gains, but at some point the market is going to reverse to the mean and get back to normal pricings. And normal pricings for volatility is nothing close to 12. It's more like 20, and we have to get back to 20 at some point. It's just a matter of time. We just don't know what is going to be triggering this. Okay, so moving on, because I'm sorry, I know it's not that I'm driving myself crazy with the US equities. It's just that everything right now in the entire market is manipulated or distorted because of what we're having in the US indexes. I mean, this is creating distortion throughout all the other asset classes. We've got distortions in the yieldings, so in the bond market. We've got distortion into the junk bonds as well. We've got distortions on the VIX. We've got distortions on EURUSD. We've got distortions on gold. We've got distortions on forex market. I mean, come on, at some point you just have to release the gains to let it go, but Wall Street doesn't want to do it. Wall Street just want to hold the volatility to the lowest possible levels to just get the bulls into having nice sleeping nights. Okay, that's how it is. I mean, Wall Street just want the investors not to worry. They've been doing it pretty well for the last 4 months. I don't think it's going to last more than that. I mean, I don't see us holding for 2 more quarters. It's not going to be the case. I always say 2018 is going to be a dangerous year. Everyone thinks it's going to be straightforward bullish. They've been messing up, and they've all been like avoiding to take this for what it is. This is not just a market retracing because it's been crazy high. That's what most of Wall Street's guys are telling you right now. They're telling you, okay, we've been crazy down earlier that year, but that's normal. We've been crazy high at the end of the previous year. Yeah, okay, anyway, we've had crazy fucking volatility. It doesn't happen in a bullish market, which means you should ask yourself a question. Is that market still bullish or not? To me, the answer is no. To everyone in Wall Street, the answer is yes. For them, the trend is still ongoing. We're going to go to high highs, and there's no questions about that. I think you should ask yourself the right question. Who's right? Who's wrong? Who's taking too much risk? Who is just trading? I think I'm trading. I think they're taking too much risk, and I want to take that gain by chasing them stop losses. So what I'm doing right now is highly speculative, but I think all those who are trying to buy are doing it the wrong way. Despite the fact that those who've been buying those lows have been done it pretty well. The guys who've been buying there, no problems. They're safe. They are not going to take any losses. And if the market is just falling apart, they're just going to lose the gains. And that's totally different. But all those who are buying right now, they're taking heavy fucking amount of risks. They are buying a resistance, and if for some reasons the market is pulling out a market catalyst to the downside, they're not going to like it. It's not going to be pretty, and the downside is going to cost a lot because they're not going to be able to get out safely. Expect the market to go gap downs and things like that. This is what you have to expect. If you look at the SPX, I mean, if you are owning stocks, this is what I like to tell you, okay? The fact that if you have real stocks, not just trading the futures market or anything like that, it's not going to gap a lot. Even though we could have weekly gap, what I expect is that at some point something is going to go wrong, and regarding the very high pricing and the very high amount of risk, things are not going to be pretty. You can expect a bearish gap, and you can expect the market to just keep on pushing out that bearish gap instantly. So I expect at some point that we can work our way out there, trying to we've been already filling that gap, so I don't see any reason for us to go higher than that. The market is going to try doing it today. I think we can go slightly higher, but it's either we find a rocket mode kind of trading and then good for the bulls. I mean, that's a battle in here. The bulls can very well be right, and I could be wrong. But if I'm right, I'm going to take a lot more gains than they will. Because if I'm right, we're going to gap someday below that support. I mean, look at this. In terms of technicals, this is a major support for the SPX. They've been buying it at the price, opening at the low, gapping below the previous day low. They bought it instantly at the open. So major support right here for Wall Street. What do you think is going to happen if we gap down and lower that price? If we ever have to open there, it's not going to be a buy the dip. Again, it's more likely going to be a fucking sell the losses anytime we get there. So I think at some point Wall Street can work its way up But anytime something is probably going to go wrong, we're going to open there and everyone's going to have to trigger stop losses. And all those who've been buying the latest weeks will be into nasty trading because they will have to sell, and they'll have to sell at lower prices. In a market that no one will want to buy. I mean, if we're opening there, everyone will know that we're going to the downside. So there will be there will be just a few buyers out of many sellers wanted to go out. So not going to be pretty kind of trading. And as I said, those kind of days are the ones with a falling knife. Opening with a gap low, everyone trying to sell, and we're making a minus 3 to 4% almost instantly at the open. And then we close at the lows, and means that the days following will keep on pushing to the downside. I really strongly expect that this is what we're probably going to experience. A market that just try to go up, fail it, and at some point just releasing the gains and just falling apart. Okay, so just to set things straight, high level of risk. If you're trying to buy right now, you're just basically buying under resistance, which is the worst case scenario and nothing close to what I'm trying to teach you guys out there. So if you want to buy, just don't do it. If you want to sell, just be patient is the only option I have for you right now. So Wall Street requires patience, and that's all traders should do. Moving on to other asset classes. So as I said, requires patience, but patience somehow needs to make gains at some points. So we'll have to figure out something in here. We're going to have a look at the European equities. And from what I can see, it's nothing close to bullish in here as well. But yet we do have a bullish day, finding resistances, but we're pretty far from the previous resistance level. And this is not something that the market is able to recover from. From what I can say, we're double bearish versus just a taking profit pattern, which means at some point we're going to have to break down lower. And I think we're just retracing to trigger another bearish wave in a daily perspective, which means patience is required in here as well. Probably going to have to find out that resistance and see what how the market reacts, but probably going to trigger one more bearish impulse. Generally, when we're doing in here, we're just taking the exact amount of resistance. So I forecast the price to go just there, finding some bears, retracing a downside. So just like I said with the Nasdaq and the SPX, I think we're going to have some slightly upward move, just digesting, for example, all the earnings release and things like that. It's gonna work our way out for a couple weeks, I think, in some kind of range trading. Some good news, some bad news, just arranging the price, and then in the end, I think we're just gonna release the gains, unless we find out a way to a crazy market bubble into Wall Street. We're gonna see how it goes. I mean, it's in the next following days and weeks, we're gonna have a tech sector releasing, and we'll see how this plays out. And it's going to be a binary choice. Either we find out a way to trigger some kind of euphoric movements into the tech sector, and we're going to drive some more money in there that we already have in, and at some point we're going to create a bubble, or we're going to move into a bubble that is already in place. And second option is that we don't find a way into that bubble. Retail traders not buying it, and if they're not buying it, at some point we're going to have to surrender the gains. We've been taking too much risk to trigger that bubble. If it triggers, that's good for those who've been paying for it. If they don't, if we don't, then they'll have to pay for it. That's how it is. So somebody is going to pay, and I think that this is too much risky to get into bubble trading, but I can be wrong, and if I'm wrong, I'm going to give the gains. I'm going to give the losses, and those who've been paying for it will take the gains. So moving on right now to other asset classes than the equities. We've got the VIX, still dangerous to me. I think we've got nothing to buy in the VIX. VIX is just dipping lower, and from what I can see right now, it's not a good news. I mean, we're making higher high and higher lows, and I think right now all we have to do is just waiting for the market to dip in here, and anytime we get back to resistances, will be a wave 3. So I'm not magician. I don't know about the timing. All I know is that sine wave is reaching potential bullish reversal area, that the momentum is right into the target, right into the trade line. So from what I can see, is something I'd like to buy. So I'm just waiting right now because I don't want to be an aggressive buyer of VIX because I'm already a buyer. I've been buying that level already, so I'm not going to buy the same price. But anytime we get to the resistance, of course, I'm going to trigger reinforcement trades to trigger some kind of nastier price action trading. So we've been having Google yesterday. It's going to be priced in today with a nice gap. As you know, everybody's going to buy that shit because it's a giga cap, and everybody is buying this. So we'll see how this plays out. I mean, if Wall Street is clearly in a bubble, then we could have a Google at plus 10% tonight. That wouldn't be a surprise. I mean, bubbles are irrational price action trading. So for some reasons, we could have Google just being paid crazy amounts of money, even though the numbers are great. Yes, the numbers are good, but the fact is, at some point, we're crazy overpricing all those assets, which means at some point, we're going to have to reduce the prices. This is the prices I want to catch. I don't want to catch the crazy high pricings just for short-term gains. All I want is the mid-term interesting price, which is, to me, at least 20% lower, not to say even more for some assets like that. So basically waiting right now, all I can see is that the market is showing some signs of risks, even though the equity market itself is just keep on going higher. So it's still the same distortions. As you can see, VIX is not hitting lower levels. Worse than that, we just try and do it, but anytime we get to a support, buyers are there. So it means that people are searching for covers. The momentum is bullish. So price and momentum both bullish. This is not something the bears would like to see. So it's waiting to see this happening right now, but from what I can forecast, anytime soon we can find some support and then get back to resistances. So if that happens, I want to be a buyer. Okay, I'm already a buyer, but I want to put some more money in here if we ever get to resistances again. Same thing goes for the junk bonds. I mean, junk bonds are not breaking anything close to resistances. Worse than that, they're just still below resistances with a downward price movement. So as I said, all the risk factors are just showing all red. We're going to see the gold showing all red as well, right on support areas. I mean, we've been triggering the stop losses in here, 2 waves, and then that's it. The market's not moving anymore. Worse than that, we're now having double bullish signal, and it's now fucking confirmed by a candle close. So I'm buying gold right now. Okay, I'm going to reinforce the gold. I'm just telling it right now. I'm going to post that video and take the gold. That's so amazing. I've been letting conditional order through the overnight session. So I've been executed right on that support. So I've been already reinforcing $1,221. So I've been bought right here on the gold. So I'm already good in here. Now the signal is just confirming what I thought. I mean, now gold is about to be bullish. And from what I can see, it's going to be a wave 1, 2, and wave 3 kind of scenario. So I think that right now gold is about to break some resistances, and that's not what the bears would like to see. So I forecast next wave to go up here, which is the previous resistance, and we'll see how this plays out. We've got that level to break up as well, and we'll see about that. But I would like to see the prices getting there. It's $1,250, and at that point, it's not possible to have either bullish gold and bullish equities. So we'll see about that, but someone is obviously lying in here, and I don't think that these are the equities. For many reasons, I think that these are the equities. Just have a look at the Shanghai Composite. Yes, we've been retracing, we've been making a nice session, but we're right into a bearish reversal area for an ABC pattern. Basically, it's a wave 1, 2, 3, big 4, big 4, and we're probably going to have to make a wave 5 afterwards to terminate and flush this out. But and I think that's the wave 5 that is going to cost a lot to US equities. They've been lagging behind, and at some point I think they're going to catch up with that lag. Okay, so all the equities are up today, and I think that it can last a couple more days, just a time for Wall Street to digest some numbers, some releases, and then at some point I think either a bad news is going to show up for no reasons and just taking everyone to the wrong footing kind of scenario, or we're just going to have to work our way out for the earnings season, and then at some point the market will be out of gas, and out of gas under resistance means that we're going to go find supports again, and those supports are very weak with a very cheap VIX, a very cheap gold, and I think at some point it's not going to be rewarding anymore to just buy the dips. Okay, it's just the market will let go, but have done a pretty nice job not managing its way up to the market top. And if we just failed it, at some point bulls are going to release, and if they release, we'll have no buyers. And even worse, if the speculators are heading toward bearish sides of trades, we're going to break a lot of supports, I think, one by one. Second thing is also the yen. If you have a look at the yen, I mean, things are not doing well. The euro yen, which is a risk factor, a big risk factor for US equities. I mean, look at this. Do you really want to buy that shit? No, you don't. I think this thing is just falling apart. We just had that very nice double bearish signal in here. I've been taking this one pretty well. Now that we're having it, all we can get is probably a couple pullbacks, but I don't see that market being bullish or nothing close to bullish. All I see in here is a market about to fall apart. And we could probably extend to 127% of the previous bearish impulse, which means this is where we might be heading, which is the initial target. The target I've been forecasting for a long period of time. And this is a minus 6.5% on the euro yen. And this is something that generally the equity market is doing at least, which means we have at least 7% downward move to plot on the US equities. And if that was about to happen, I don't think we're going to stop there, but we're going to go lower than that. Okay, not the euro yen. The euro yen could go slightly lower, but I think in here I'm going to take the gains. Nice gains. Once again, that scenario required a lot of patience. Been shorting that shit right up to the market top in here. Tried again in here. Got stopped margin. Got stopped half the position in here, just to take it at higher pricings right in there. Now I'm back into positive trading in there, and I think anytime soon I'm going to get into even more reinforcements. I'm just waiting to find some support building in here, some kind of validation. So it's confirming the exact same thing I've been thinking right here, is the fact that Wall Street for some reason is going to try save it, to just try to work out the resistance, trying to hold the euro yen, trying to hold the gold, and at some point all the money is going to drive into those assets. The euro yen would just probably fall apart, the gold is going to surge, the junk bonds are going to fall apart as well, the VIX is going to break all resistances, and this is what I'd like to see. So far I don't see anything of close to this, which means the scenario has to remain speculative. Okay, as long as the prices are not confirmed. The fact is that euro yen, I want to be bearish in this, because there might be no pullbacks, just as we had back then. Look at this, the euro yen just got all the way through it, just retraced a bit afterwards, but anyway, it just went all the way down, and I see no reasons for us not doing it. I mean, the euro yen could just go there in a straight line, so I want to be a seller of this one. I'm just waiting for now for the other scenarios to trigger. So GBP/USD, I'd like to see this one triggering as well. I'd like to see the damn gold making its way up and just stopping in here. I mean, just anytime we've been trying to work out a support with the gold, it's just been sold and sold and sold and sold and sold by aggressive sellers. I mean, right now, I don't see any reasons to sell this. We are right at that market, at the sine waves target with a taking profit pattern, which means the bears should secure the gains, and I'd like to see some bullish demand. I mean, bears getting out means market is surrounded by buying demand. So we'll see about that, but I think at some point right here, the bears are going to get out, and if we can manage to take some strength, I mean, if there is any signs of risks, we're going to break up resistances. And if we break up resistances, failing that breakout means that this is a range breakout, what I've been thinking since the first time we done that shit. I think right here is a range breakout structure, and I think this is the mid part of a range, meaning that we'll go higher and we'll even break that up in the end, which means we're right into very interesting buying entry prices. If I'm right, this is mid-range, which means the range is there, which means we're right in the bottom. Okay, consider it like that. I mean, this is the range. Trying to break up, never managed to do it, just making lower shadow, upper shadow candles or bearish engulfing patterns in here. So this is where the resistance is. You can even consider it that way. This is big resistance, okay, but I think this is big support. Okay, I don't see the market going lower than that. I think we can go slightly lower, just getting in there, but we've already tested that price. So all we can do in here is making lower shadow candles, trying to trigger stop losses, but I think it's not working that big. It's not working that well right now. And so far what I can see is that generally, when you do your way into a bullish market to find out the market, the range bottom, we're generally not working the price area for an extended period of time like we've done back then. Generally, when we're at the bottom in a bullish trend, we're buying it. Just buying at the low. It's a buy the dip kind of situation, so we shouldn't get there for a long time. And I think anytime we're going to break up resistances, it's going to be really clear for those who've been selling that this is not a bearish market, that this is just a range. And as you can see, if this is just a range, we just made the perfect mid-range breakout in here. Can't do anything better. I mean, trying to break up, failed it. Trying to break down, failed it as well. What is this? If you just follow the strategy, this means a range. This doesn't mean anything close to a bearish market, anything close to a wrong footing market, just a damn range market. I've been failing buying those lows, thinking that this will be the good ones. I've been buying those lows, thinking that we'll have the bullish trend line supporting the price. This is where the bears got in. It gave some room for Wall Street to perform with a lower VIX, and at some point I think this is not normal. We shouldn't have had that movement, but we just got it because of the gold, and now because of the dollar. But I think right now dollar is going to be in a weak kind of scenario, not going close to bear market, to bearish reversal, but just I think gold is about to retrace and to range, which means we're no longer going to have the dollar pressure into the gold, which means gold we should be able to perform anytime we'll get a risk sensation. Okay, so we just need to find reasons to make the market fearing things, and anytime we're going to fear something, I think we're going to have a straight line to get into gold, into yen, and into risky asset classes, and getting out of risky asset classes. So what I'm going to watch out for right now is the heaviest amount of risk. Anytime we're going to have a bearish signal in here, as you can see, momentum's already bearish. We're right into the trend line. So I'd like to see how the junk bonds are going to react. We've been finding the cycle into sine wave, so we've got everything we need to short the junk bonds. And if the junk bonds are sold, you know that the stock market is going to be next. Okay? So wait, be patient, but really needs to be assessing the risks. I know I might sound over bearish to most of you guys, but just to set things really straight here, this is voluntary. I know I'm a little bit too bearish, but I'm doing this for simple reasons. I'm not doing this to fear and scare you out. It's just that I want you to fear that bullish market because I think it's very unhealthy and very dangerous if you guys are getting your head and your money into this. I don't want you to buy stocks because from what I can see and the experience I have as a professional, this is a very, very dangerous pricing market. And in front of this, as a professional, I don't want you noobs to get in there not really knowing what the market is and probably be facing the highest level of risk if you are buying at the current pricings. Even selling is dangerous, but it's still less dangerous than buying. Okay, so if you want to do something, try to sell, but do it with very, very low leverage, being aware that this is highly speculative, but buying really isn't an option because anytime soon something is going to go wrong, and whenever that will be the case, you're probably not going to have the outcome and the output you were expecting. I mean, everyone's going to look for the exit. And I think that it's not going to work out the way everyone think it will, meaning that it's going to end well. And that anytime if the market is just going down, we'll have the pullbacks to get out safely at good prices. I think it's not going to be the case. I think we're going to have a brutal mean reversal and that everyone is going to have to trigger big losses if you try to buy. Okay? So if you even got to buy, I don't see any reasons for you not to do it. You can buy, but do it very short term. Take the gains ASAP. Don't hold the trades. And if you're doing it, be aware that this is even higher level of speculation than trying to sell, which means you have to do it with an even lower leverage. So if you absolutely want to trade, do it. No problems. I can ensure that if you're buying right now, it can do well for a few hours. But I don't expect the market to remain bullish for weeks. It's not going to be the case, hardly going to be the case unless we're heading toward a nasty bubble trading. Okay, so have a look at this. This is earnings seasons. We're going to have the biggest tech releases between this and next week. And we'll see how the market reacts. But just to be honest, I think that there's one that is heavy fucking danger, and that's Apple. I think Apple is releasing into 7 days. We've got earnings estimate at 2.18, which means we're expecting earnings to drop. Okay, and if Apple is dropping in terms of earnings regarding the previous quarter, how do you see the price rising? Okay, so yes, the only news we can try to buy for Apple is the fact that Apple might beat the consensus because the consensus has been really negative. But let's set things straight. The fact that we're holding the price at the highs means that Wall Street is forecasting Apple to beat the consensus. Otherwise, we wouldn't be at the market top. If the market was just thinking that Apple was about to make that 2.18, we would be there. So until the next 7 days, I think something is going to be in the play for Apple. Either people will anticipate this, and we could have a very brutal sharp reversal ahead of the earnings release, or the earnings release might be disappointing Wall Street. And if that's the case, if the biggest ever market cap into the US economy is disappointing the market, this can be devastating for the entire earnings season. So Apple is the game changer to me. We'll see how it is. If it has to switch to bubble trading mode, I think Apple might be responsible for it, but might also be responsible for the opposite choice. If the market for some reasons was about to crash, not to crash, but let's say terminate the long-term bullish trend and get into retracement or bear market territory, I think Apple might be the trigger to do it. I mean, if the biggest ever market cap is failing to make better than expected releases, is failing to make higher profits, then what's the point of paying that shit $191 per share? I mean, it's the most expensive stock on earth, and people are buying it. I just don't get it. I mean, we're not making any more profits in there. We're even forecasting narrowings into the earnings estimate, and we're still fucking pricing the highest ever price. It's not normal. It's nothing close to normal. So there's only one reason for the price to go higher than that. It's by creating a nasty bubble. And from what I can see, it's still possible. I mean, getting in there means that Apple could very well create this, a crazy high stupid pricing kind of candle. I don't see no reason for Apple not to do it. Extending for 15%, for example, getting in here. Anyway, after this, end of the story is going to be what the market will do. If we just go there, anyway, we're going to go lower in here anyway. So it's just a matter of timing. Are we already too late regarding Apple, or is just going to be the magic at play once again to go crazy, adding 15% to the higher pricings? If we do this, I think the market will be into bubble trading. I mean, if even with narrowing, with lower profitability, an asset can make higher pricings, and if that asset has the biggest ever damn market cap into the entire history of the stock market, there's only one way to explain that. It's just fucking bubble trading. So if, as you can see, bubble is not something, it's something that is actually usual at the end of economic cycle. We generally see bubbles like that. The question is, are we able to make one on that cycle? It's the only rational question I'm asking myself lately. It's the fact that we already have the biggest ever credit bubble already behind us, already below us. It's just supporting the price. What's supporting the price recently for the latest years is the craziest ever credit bubble. So we've got a credit bubble already. That's already in the price. I think 30% of the current prices are just fake credit that the central bankers have been adding into the market. So at some point this will have to be paid for, which means we're already having 30% fake prices into what you have in front of you. So if we just flush out and crashing the bubble, the credit bubble, it will probably just cost us a 30% drop into major equities. I think that's what I think. 30% drop, and then we'll have decent prices to buy again by just flushing out the credit bubble. But if we do add some speculative bubble on top of it, we'll have something that we have never ever fucking seen. We've never ever had double bubbles in the same time. Asset bubble doubled by a credit bubble. And believe me, you don't want to be facing what the bear market after this will be. Very simple reason. When you buy because you can manage the risks, because you can handle what might be at play next. How would you like to buy not knowing what's at play afterwards? Which is actually the case right now. You cannot buy because you don't know what the correction will look like if we do into bubble, if we put ourselves into bubble trading. Because we'll have asset bubble plus credit bubble, and the corrective market following this, we've never seen anything close to that. Which means it's going to be a first case scenario, and anything that is like that is not something you want to be part of when it goes wrong. So don't buy right now for that reason. The only reason is that if we get into bubble trading, then you can make short-term gains, but you don't know how this will end. You don't know how this will reverse because we've never faced anything close to this. So buying and not knowing is not something that belongs together. So buying is not an option to me unless you're doing for a few hours in an intraday basis. You're just buying and releasing each and every day just to get out of risks. Selling is dangerous, as I said. It's highly speculative and can be wrong-footed easily by the market just to take away your stop losses. But I think it's still less dangerous to sell than to buy. Because if something goes wrong for any reason, something unexpected is beating the market, all we're going to do is going to the downside. And at that point, if I'm short, that's going to be a good news. So worst case scenario could be a good news for a seller. It could be the end of the world for a buyer who's been doing it with tiny leverage. If you're just putting it, let's say a leverage 2 or 3, if the market is dropping 10% in a day with a gap, you just lost 25% of your equity, and that's not something you can afford. So don't do this. Wait, be patient. If you want to trade the equity market or even the forex market or whatever, because actually right now all the markets are distorted because of Wall Street. I think waiting right now is the most rational choice. It's not the time to make the big gains of your life. It's the time to just try to understand what's at play right now, assessing the risks and taking a lesson by just watching right now or trading with very low leverage. This is all I can recommend to you right now. Just trying to get the lesson out of what's happening right now. Let the professional playing, and if you want to play to get to the feeling of actually trading with real money, then just do it with the lowest possible leverage. And if you take a gain, then it's a good gain anyway. If you take a loss, it's a negligible loss. That's all you can. That's the only mindset you should be into right now. Okay, so I hope I taught you an important lesson today. It's the fact that right now is not the good timing to get into trading. If you're already a trader, then good for you. You can try yourself in there. It's going to be an interesting pricing in the next following weeks and months. If you're a beginner, just watch for this. Trade very short term. Don't take risks. And take the lesson the day it will come out. I mean, I don't have the dates. I'm no magician, but I know something is going to go wrong at some point in here. It's just a matter of time, and it can be days, can be weeks, can be months, but cannot be more than that. I think into a 12 to 18 month maximum time frame, something wrong is obviously going to happen. And as I said, you don't want to be facing it. So it's not the perma-bearish kind of talking in here. I'm just saying that risks are too high to get into trading that market into the bull side. I wasn't saying anything close to that when we were in 2013 or 14 or even 15. It was just back then that all we could expect was something that we could manage, okay? That's the real big difference. A perma-bearish is some kind of person who will tell you that right here central bankers are doing something they shouldn't, that the market is going to collapse. I wasn't saying anything close to that back then. Actually, I wasn't communicating, which means there is no videos recorded of me back then. But you can be sure when there are videos of me in 2006. Sorry, just in French. But there are videos of me in 2016 just saying, "Okay, shit, just buy that market. It's gotta go higher." And back then I was buying when everyone was just crazy high, thinking that it was the end of the world. I was just buying in there. It's just that right now I think we've gone too far, and that there's nothing else to trade. It's just that the end is near. Not yet knowing where this will be. You can go slightly higher. I don't really care about that. It's just that right now only selling is interesting in terms of daily to weekly time frame. So you don't want to be trend buying when that trend is over and searching for a reversal. Okay, and that's basically all the guys at Wall Street, what the guys at Wall Street are doing right now. They're trying to make you think that the trend is still in play. It isn't. We're already nearing the end of that trend. Not to say we probably have it already. Because to me, if you have a look at this, we've been making a new lows in terms of momentum since we haven't in 2017. So right now we're having a bearish weekly momentum. So either we're going to go higher to create a divergence, which will be a bearish signal either way, or we're already bearish and we're going to have a nasty reversal heading toward major supports. And this will be the forever market top. I mean, from what I've been seeing lately, everybody thinks that we're going to go higher, that we're going to make higher high on the SPX. What if we weren't? It's just a simple question. You got to remain open-minded. Okay, a trader always has to assess all the possibilities. The problem to me right now at Wall Street is that all the Wall Street guys, all the golden boys, have taken this for granted, or is trying to make you think that way. I think it's not going to be the case. If we fail in here in Wall Street, I think the market top will be already in place. And that the market top is the one we already have, and that we're never ever going to go higher than that. We'll see about that. I see a few options for us to trigger this, higher pricings to go higher than what we've done earlier that year. But if for some reason we don't find a way to trigger the magic to go higher pricings on Apple and things like that, I mean, they are the only assets who are driving the higher pricings right now. The money is concentrating into those fangets. And if the money is at some point is getting out of them, I think just the market is going to fall apart, because we already have a lot of components of the S&P 500 already nearing a 52 weeks low. And yet we're trying to figure out pricing historical highs. I mean, just to figure out how stupid that behavior is. So just think it the right way. Something's obviously wrong with that bull market, and only professional can feel that. And of course, everyone else just think that we're just trending. I think we're not. So we'll see about that. But anyway, high danger in the current price area. If the market for some reason is managing its way to the new highs, then this is where you can eventually try to buy with very, very low leverage. And you have to get out each and every day trying to grind your way up to new highs. But until we get to break 28.36, no, it's just to set things straight. I'm going to give you the price. Yeah, it's 28.31. Until we remain below that price, you don't want to be a buyer. It's just the biggest ever resistance the market has ever felt. And everyone forecasts that resistance to just break up like it was nothing. I think it won't. And and on top of it, I think the market is just going to be wrong-footed at some point if anything goes wrong. And we've got plenty of things that could go wrong. It's just that the market doesn't care about that for now. Okay? Understand that. It's a matter of timing. If at some point the market is switching the psychology to risk off, it's going to be a switch. And it can switch into an hourly basis. From 1 hour we're bullish, the next hour we go bearish. It can be just like that. Okay? So that being said, I'm just saying the same thing all over again. So I'm going to stop here. Wish you guys a good day. Just going to take your questions before we get to move on. Yes, a high gratification. Thank you. On July the 11th, and at the time I didn't realize that you answered them at the end of the following analysis. I put it. Okay, no problems. I don't recall what that question was back then. Yeah, the correlation between the stock market and the crypto market. I think this is a very dangerous correlation to make. It can be some kind of safe haven at some point, but I think the only situation that can get us into this is if we ever get into financial crisis. Okay, and just to say this out loud, I think bursting a credit bubble is not necessarily going to be a financial crisis. Okay. Yes, we've been making QE. It's been inducing credit distortions. Yes, I would rather call it that way. It's not necessarily that we have a credit bubble. There is some tiny bubbles into credits. For example, we've got a real estate bubble that is clearly there into some specific markets like LA and things like that. When prices have been driving crazy highs for no reason, there is clearly bubble out there. But I wouldn't necessarily call the entire credit market a bubble. But there is a heavy price distortion into asset credit that's been induced by the QE, of course. And that distortion, as every distortion, will require the market to return to the mean. And as I said, to me, it might require a 30% drop because of all that fake credit induced into pricings. But nothing more than that. And generally, into investors' mind, a 30% drop out of a market top is entering into bear market territory. Is nothing close to entering recession territory. So we could just have a financial kind of crisis by just dropping 30%, but that doesn't mean the real economy will have to suffer from it. And I think that in order to switch to Bitcoin as a safe haven, we'll have to get into real economy facing recession. And if we're not, I see no reasons for the people to get out of fiduciary money and get into cryptocurrencies. Okay, so these are the two scenarios I have. If you want to have full adoption of Bitcoin, I think at some point you're going to need to have more than just a financial crisis. You're going to need to have an economy crisis that affects people, not just the market, okay, not just the investors. If we're just flushing investors' money, that's what we generally do each and every 10 years, and that's not a big of a deal. It doesn't necessarily induce the real economy to suffer from it. It can be a short-time tough period for economies and for politics, But that's it. I mean, it cannot necessarily requires the job market to go into 20% unemployment and things like that. That is what we call heavy recessions. And I don't think that we're heading toward this unless we fuck up the economy by creating even more bubbles. And the more bubbles we create, the nastier the corrections are afterwards. And the deeper the corrections become, the more risks it puts to the real economy to be following through and entering into recessions, okay? So what I'm saying is actually that going down right now would be a good sign. It will be just a sign that the economy can survive and that we can just have a financial crisis. If we're just going crazy high pricings, it means that we're going to put some more risks, adding risks ones on top of each other, and the day the pile will just fall apart, I think real economy won't be able to survive it. And in that case, that would be a good sign eventually for crypto traders, because we could have pricings migration towards cryptocurrencies, for example. So those who absolutely want full adoption of crypto markets might be interested into getting in a nasty asset bubble. No, I'm sorry, I'm just kidding in here, but I think you got my point. Okay. First of all, thank you for all the efforts much regarding the underperforming Bitcoin. Dominance is rising because the recent bullish action is based on ETF proposal. Yes, I've been hearing about that ETF proposal, but I don't really think that this is a big game changer. It could actually be a big bearish game changer for Bitcoin for simple reasons. The ETFs. I'm going to terminate on this because this is really interesting. I'm sorry, today's show is going to be pretty long, but these are informations you might want to know. This is not something anyone else is going to teach you. This is just professionals who knows about that. I mean, ETFs is probably going to be. Consider this as a vehicle. Okay. Just like back in 2018, where we're just creating the subprimes, when we were just putting nasty debt together, putting them a good knot for people to buy that shit. And whenever people just figured out that this was actual shit, and that they wouldn't get the money out of this, and moreover, even losing the money they put it in there. They just figured out, oh shit, somebody's been lying to me, and I might even consider taking a loss. So I should drop that shit ASAP, and that's what triggered 2008 crisis, because we've been accumulating shit together, trying to sell it at very high pricings, even though they were dangerous. Now just transpose that to the current pricings into equity market. We've got the most expensive ever pricings into equities, yet we're still pricing, we're still creating value at a GDP that we had back in 2008. So it's nothing more than what we've usually done, yet the pricings are crazy high. So yes, we've got underlying inflation created by the central banks and the QE, which is, as I said, a price distortion, probably going to cost 30% of valuations at some points. And the question is, either we're going to do it alone or with a speculative bubble ahead. But ETF is just like that. I mean, we've been creating ETFs to create some kind of packages of things. And today, most of the ETFs proposed are just stock proposed ETF, which means we've been accumulating things. We've been selling. ETF is just crazy high amounts of liquidity today. It's just the exact same thing as the damn subprimes back then. We are putting things together, trying to get the highest reward out of the entire package, try to sell this at the higher pricings, but we don't really know what's in there anymore. I mean, we're probably buying shit. Those who are buying Fengit ETF, they've been making gains, and they think that's easy gain that's going to be there forever for many reasons. Just back in 2008, same words, just a different position. In 2008, it was too big to fail. Those who were selling those contracts, those shitty bonds, they were too big to fail. And we said, okay, it's no problem. If Goldman is buying this, means that it's safe, so I can buy it either. I can buy it too. That's what the people and investors were thinking back then. They got triple A's, even though they were full of shit, and only professional news about that. Professionals knew that this wouldn't end well, and that at some point we'll have to pay for this. Every professional in Wall Street knew a few months before 2018 that something will obviously go wrong at some point. They just didn't know when this will trigger. Just as I'm doing and telling you right now, everybody knows something is going to go wrong. It's just that we don't know when. It's just a matter of time, and it can take a couple weeks. It can take it can take up to 12 to 18 months to me to go wrong. But I don't see things heading longer than that. Okay, and I can be wrong in there either. So it's just really be aware that ETFs is probably the place where the problem is going to start. At some point, valuations are going to drop. ETFs are just going to fall apart with an extensive amount of liquidity in there, and the market is just going to it's just going to implode, because when people will want to release the ETFs, there will be no one to rebuy those. Okay, that's the risk I have. I think many people have been giving money into buying ETFs, but remember, ETF is a vehicle. You think that you are buying what's in there, but you're not. I mean, people are buying what's in there for you. ETF is the equity traded funds, but it's a fund. If everyone wants to get out of that fund, everything that is inside that fund is just worthless. And if everybody is doing it at the same time, it creates systemic demand, which means we'll have everyone trying to get out to sell with no buyers. And when that happens, you know how this ends. It's like every bubble bursting, people are asking for the money, and there's not enough money for everyone. It's just pure and simple. That's how every fucking bubble explodes. People are getting in, thinking that's going to be easy, that the money is there, and you just have to crouch yourself to just pick it up down the floor. It's not going to happen. Whenever you see this, you know a bubble's at play. You know it's not going to end well, and that is just a matter of time before people ask for the money that everyone doesn't have. It's just pure and simply this. I mean, every day, right now, everyone is thinking that the price will keep on going higher and doesn't focus on what may happen if the prices are going downward. If the prices are going downward, there's not enough liquidity for everyone, because everyone is because most of the retail traders and funds are trading through ETFs, which means when they want to sell, they cannot sell one stock. They'll have to sell the entire package. And that's good for the bullish market, because that makes people buy things they wouldn't have bought otherwise. But think it that way. How do you think it's going to work its way out when we'll get into bear market? People will also sell things they wouldn't have sold in a normal pricing. So what pushed us upward is probably what is going to push us further downward if we ever get into bear market territory. So be aware that what we're facing right now and the recession that might come, if it comes, I mean, at least the pricing correction into the stock market is going to be something that we have never ever faced. So get yourself out of it. If you are into ETF trading, just reduce the leverage, get yourself the nice gains you have right now before thinking that they will go on forever. The day it will go wrong, you will lose a lot of money, and the worst case scenario is that you will hold on to your ETFs, and that will be the worst possible choice you could make. So be aware that if things turns red, you'll have to release ASAP And the best and smart choice would be to do it when the prices are still higher. If you are an ETF investor and that you have nice gains right now, just take them half out. Just take 50% out, enjoy the gains, live and take yourself a nice vacation for it. Leave the 50% in the still in the market, because for now we don't have signs of an upcoming falling market. We all know that the risks are there, and that's important. Those who are fully invested into assets like stocks market, ETFs, bond market should be really worried about the fact that the risks are increasing, and that regarding the increasing risks, all you should normally do, what a real asset manager is doing, is reducing the risks accordingly. And so should you. Professionals are reducing the risks, they're probably taking gains, so you should do the same. Instead of just piling long positions one on top of each other and just getting yourself into more and more leverage trading or things like that. This is absolutely the opposite of what you should do. Instead of putting more money in, you should put some money out. Not the entire amount of money, just to set things straight. Okay? Bye-bye, guys, and see you later.